Now, here's Manjit Singh and Kusum Ramachandran with more solutions for your tax dilemmas.
Good morning, ladies and gentlemen. This is Manjit Singh, CPA from Falls Church, Virginia, with offices in Ashburn, Falls Church, and Manassas. Last week, we talked about a special form 8938 that the IRS came out new for the year 2011 income tax returns. Today, I'd like to talk about Schedule D, which is there's a new form with it. Kusum, what's the number on that form?
It's Form 8949, and it's for reporting your capital gains or losses.
Forgive me for the confusion. 8949. So technically, what does the 8949 does is you, instead of filling out Schedule D, where you used to have the grid to write down the date of the stock purchase, the date of the stock sold, the cost basis of the stock, what you bought it for and how much you sold it for. Instead of filling out Schedule D now, you're going to fill out Form 8948, 8949. It is basically the same information. I don't know how this TurboTax and other softwares are going to treat it, but last night I did one and I got a little confused, so I had to go and ask my tax master. Kusum, would you like to give a little more description for those people who are going to try to do this form themselves?
Sure. If you look at the 1099Bs that you are receiving this year, you'll find that for a good number of the stocks that you sell, the cost basis is actually reported to the IRS, and the statement will let you know. Form 1099P says that they have reported the basis to the IRS. Then you have other stock items for which it's not yet required, and therefore they have not reported the cost basis to the IRS. And when you file your Schedule B, if you're trying to do it manually or using some software that's available, there are specific codes. A code A is for stock that you sold of which the cost basis has been reported to the IRS. B is stock that has been reported on 1099B, but the cost basis has not been reported to the IRS. And C is an item that you're reporting on your 8949 for which you have not received a schedule, a 1099B rather. And so you have to make the distinction between the three. You have to fill in as many 8949s as it takes, and the totals from those will carry over to the Schedule D. In the years past, some viewers may recollect that there used to be a Form D1 which had detail if you had many transactions. The D1 no longer exists. 8949 takes its place, and you have to fill in as many as you need to. If you have a lot of transactions, the totals carry over to the D, which looks quite different really from the one in the past. And then of course the gain or loss is computed as usual. The amount that's allowed is the same. There's no changes to that. The rates on it also have not changed. The short-term ones are at your marginal rate. The long-term ones are at 15%. But there's a little extra work, and every transaction has to be coded with an A, B, or C.
So, folks, basically what it means is the A code on your 1099B, you're going to have it, or you have the cost basis. If, for example, you open the brokerage account on a specific date, and all the account activity is in there, and the brokerage house is maintaining the records for you. If the brokerage account was open, let's say 10 or 12 years ago, or the account was closed from one company and transferred over to another brokerage company, at that point in time, you may not have the cost basis, and that's exactly what the IRS is trying to find out, that the IRS did not get the cost basis from your brokerage house. So be careful in there, because that, quote unquote, from my perspective, is a audit trigger that did you really cost you that much to buy it, or was it a fabricated number? And then of course there's a code C, which we are identifying that the cost basis has not been reported to the IRS, the 1099 doesn't exist, and that is a situation where father and son are exchanging stocks in privately held corporation like the S corporation or the C corporations. My best guess is they're trying to go there and see who is transferring the assets. Kusum, would you like to add anything else?
It's also important the brokerage houses are now required to report the wash sales and the disallowance of the losses from wash sales, and there is a spot on the form to record those as well. So it's actually, for the taxpayer itself, a little easier, because in the years past they used to have to rummage through their records for the most part, and as the years go by, more and more of the equities will be covered by the reporting requirement for the stock basis, for the cost basis. But for this year, of course, you'll have two parts: those to which the cost basis has been reported and those to which the cost has not been reported. I think that's a lot of detail.
Yeah, so well, folks, as you see, what the IRS is trying to do is eliminate, as we go along, the gray areas and tightening the pathway which you walk through. And with this information, I hope you guys enjoy trying to do your own return. This is Manjit.
And I'm Kusum. Thanks for viewing.